Good morning. It is Thursday, October 16th. Zach Howard here. Morning market update. Some cool charts today to look at from Citadel Securities. Let's look at the options flow, the tail that wags the dog in equity markets in 2025. It's all about options, all about volatility, it's all about the flow of the machine. Fundamental analysis, not so much. And we had the big volatility spike from where it's been on Friday past on the Trump tweets or Truth Social headlines about let's have a fight with China again. Let's get the volatility ramped up in crypto. And what happened? The retail investor, someone like me, probably someone like you, small time guy, sitting at home, maybe he has a job, trading on the side, trying to get ahead. They bought the dip. They continue to buy the dip. They bought the dip in April or Liberation Day, and they continue to be successful in that endeavor. So they're not. Friday, largest options trading day in market history. Really speaks to similar things I talked about: Weimar Republic, gambling, short dated behavioral mechanisms are throughout society, and we see it. Dopamine hits, and we're coming through with that absolute highs here, like I say, in the options trading. 73% above the 3-month average out of Citadel, who is a big maker in that market in the options flow. Crazy. The surge by the dip mentality has really skewed this spike in the S&P since those lows on Friday, despite volatility still hanging around this 20 and the VIX, which is not a great place to be from buying previously. But we're looking at the longest retail weekly option buying streaks on record since 2020. A lot of that, though, has to do with 0 days to option. Previously, options buying or selling was only reserved for the institutional investors, sophisticated Wall Street hedge fund crowd. Now with Robinhood, 0 days to expiry, boom, 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 everything just goes up. The retail investor is using options as their way to play the market. The Warren Buffett buy and hold and analyze the company is not really where it's at. People want instant gratification, and we see it through the options market, but they've been successful. Hats off to them. Net notional week standard deviation flows, 23 of the last 26 weeks inflows into retail buying that dip, 7 straight weeks. Fading the move is the smart money. I hate that term, smart money. Institutional money, Wall Street, hedge funds, etc., which continue to get crushed in this week here now after Friday, putting on massive bearish bets, thinking this was the next liberation spectrum, potentially, like back in April. That's not been the case. Yesterday, the last 3 days, the Goldman Sachs most shorted index of shittiest stocks out there, particularly well inside that Russell small cap index, IDOEF, Plug Power, crappy companies like that who have no real earnings, high short interest. It rallied 13.4% in the last 3 days. So hedge funds that were short that space have been getting carried out. So institutions are fading the move. Retail's buying. This is a off the walls chart I wasn't expecting. The cohort of investors that are under 40, which we've been told are the ones without any real assets, they've seen their returns be massive, 300% since 2020, when this whole mentality of short-dated options trading, Tesla, meme stocks, crypto, etc., was embraced, and they're killing it from their standpoint of like, it's not just the boomers. Look at the wealth that sits inside that demographic. I'm really surprised to see that out of Citadel's presentation here. October, historically, that's when market crashes, but also big up moves the other side. So the most volatile month in the last 100 years is October. We're halfway through the month. S&P 500 performance after the mid part of the month historically has been positive. We are in the cusp of earnings season. Right now, I think the most companies are in the buyback window in the S&P. There's something like 1.29 trillion in U.S. buybacks authorized here on record that need to get executed. The Russell 3000 has 1.3 trillion in buybacks on the tape here in the year end. S&P 500, another 1.1 trillion thereabouts. Both those the highest in history. So those big buyers of the market, their own stock, buy back the shares. If you're Microsoft, Apple, etc., cancel them out. Combine that with the retail flows, combine that with the passive investing, combine that with volatility control. That is the bid into the market. So we get through this next week or two here. November, December could be another strong month to finish up the year. Two awesome quotes here that I think are relevant to what we're looking at in markets. It's not about anybody else. It's not about the best formula out there. It's not about having the secret sauce. It's about you. What's in between your two ears? What's here? What keeps you emotionally in check? Play the hardest game there ever is, which is markets, which is trading. That's what makes it fun. That's what makes it so enjoyable for me. Is you against you, you not against anybody else. From an equity performance standpoint here, gold continues to rip. Oil continues to be in the shitter. High margins there. Talked about that yesterday. Silver continues to be the ripping. Natural gas, not so great. Copper, nice. Bitcoin and all the crypto really struggling here with this bounce into beta. Not really doing anything in bearish trend. The best index out there is not the S&P. It's actually the Nikkei in Japan. Just continues to kill it with its debasement of the Japanese yen. That's what I got for you today. Remember this top quote. It's better to know some of the questions than all the answers. Be curious, be humble. That's what I got for you. See you next week, guys. Taking a few days off.